Hello, everybody. This is Anthony for Investors Underground. Today, it's a pleasure for me to have the opportunity to speak with Ricky Analog. Ricky provides a wealth of content for the trading community. On his YouTube channel, he has a video series dedicated to helping traders learn how to dig through SEC filings in order to research companies that are ripe for dilution. He also records a weekend video where he helps traders prepare for the week ahead. There, Ricky shares his thoughts, charts, and technical analysis skills. He's a chat moderator, a mentor, a husband, and a father. In addition to combining fundamental and technical analysis, Ricky provides excellent perspective on all things traders need to think about, from due diligence to taking personal responsibility for their trades regardless of the outcome, and even breaking down barriers between trading communities. You could subscribe to his YouTube channel and follow him on Twitter at Ricky Analog. Hello, Ricky. Thank you so much for being here and taking the time to speak with me today.
Awesome. Thanks a lot for having me, Anthony.
Ricky, I'd love to just start by asking about your background and how you got interested in the stock market and trading.
I always thought the stock market was, you build up this image in your head of what it is. And to me, it was like this exclusive club that was only for, rocket scientists and wealthy people. And, I had run a business with a business partner for quite a few years to the point where it had become more hands-off for us. It was more becoming passive income. And we both had a lot of free time on our hands to pursue things that we thought were more like our passions as opposed to just trying to make money. And, I took that opportunity to start learning about the stock market. And the more I read, the more I realized that, hey, maybe there is the ability to participate in this. And one thing led to another. And it wasn't long before I had my first account opened. And then it didn't take much longer after that till, I had cut that account in half and then, learned a bunch of hard lessons, picked myself up off the ground a few times, dusted myself off, and the rest is history.
Yeah, it's interesting that you mentioned that, starting small and building an account, but that drawdown, which it seems to be inevitable for like so many traders. One of my questions is, were there any particular lessons during, the early part of your career, maybe the first year, that really stick out in your mind or really had an impact on you and how you would go about the next part of your trading journey?
Yeah, the first part of my career was, I started during the first pot stock boom, which I believe was, don't quote me on this, I think it was late 2012. And, it was all the pot stocks on the OTC were going nuts. And there was a lot of people on Twitter just calling out all these different names. And I found Twitter, FinTwit, and, following traders into ideas was what really lost me all my money in the first go around. And I think that was a really, really important lesson to learn because, eventually I think a lot of people start out and they don't really know where to go. And so they look to people for advice. And, some people might come off as trustworthy or they have your best intentions or best interests in mind. And nothing could be further from the truth. A lot of times they're just pumping their own book, right? And, I'm happy because I learned that so early on that it didn't take, it only took me that early part of my career, the first 6-7 months, to realize that is definitely the wrong path to take. And so when I came back and had put in some more work, I realized that everything I did moving forward all had to be based off my own ideas and my own, execution of the ideas.
Yeah, that's actually one of the things that I think is really great that you do, is you really advocate for traders taking personal responsibility for the trades that they get in, whether they're right and they profit or whether, it doesn't work out for them and they lose money, and also doing due diligence. Are some of those early experiences that you had, were those influences for you to really push traders to think for themselves and do the work on their own?
What's funny is I probably never really thought about it that way. I know it was what pushed me to do that for myself. And then, I never actually thought that I would be in a position to help other traders, right? Like, it's been a long journey. That was 10 years ago. And, time really does pass fast. Like, you just keep your head down and you keep grinding and you look up and you realize you're in a whole different place. And, now I am in a place where I do help traders, from all levels. And, I've always been kind of geared towards, I'm not here to give handouts. If you ask me questions, you'll frequently be responded to. Instead of an answer, I'll just ask another question that will lead you to thinking a certain way that will help you find the answer on your own, as opposed to just being handed it. And then on top of that, right, like, there's so many different ways to trade, that I'm pretty confident that I don't have the ability to look at somebody's idea and tell them that will never work, because the stock market's so good at, like, making everybody look like idiots, right? The second you say that'll never work, that trade ends up working, and then you feel bad because you talked that guy out of that trade. So I always just tell people, like, have a plan, you plan the trade out and you trade the plan, and that's it. And then afterwards, as long as you don't deviate from it, afterwards you can go back and reassess all the different steps you took, all the conclusions you came to, see if there were adjustments that needed to be made. But that has to be done after the trade's executed and after the idea is played out. And, I say this a lot. Ideas are a dime a dozen. They're not worth spit. What really matters is execution. And, I can give people ideas for days. I can look at a chart and say, look, if it were to go here, I think that's probably a good spot to be thinking about a fade. I think if it comes down here, you probably have a good chance at a long. Really, if you take an idea of mine and make money on it, don't ever DM me and say, hey, thanks for the idea. That worked great. No, pat yourself on the back. Same way, if it doesn't work, I don't want a DM scolding me, right? Like, I know that I'm wrong all the time, and I'm fine with that. So, if you hear me talk about an idea and you know that I took that trade, if the idea doesn't work, don't ask me, hey, are you still in that? No, because I manage my risk.
Yeah, that's a great point. The ideas are quite easy to come by. That trade management, you can have different traders all get into the same stock, probably even at the same time, and they all trade it and manage it differently.
Yep, 100%.
In terms of the market and trading, what were some of the primary motivators for you? Was it, possibly making money, or was it like an intellectual curiosity and pursuit that you wanted to sort of figure out? Was it a combination of those, or, what was it about the market and trading that really drew you?
Like I said, like, early on, it was the feeling like it was some sort of secret society, like this exclusive club. And then obviously finding FinTwit, you are quickly shown the shiny objects. And so I did obviously see that there was the possibility to make a lot of money. But after quickly losing a lot of money, the real driver for me actually became the fact that I got knocked down, right? Like, and I guess maybe not everyone would be the same as, or handle it the same way, but, like, typically in life, when I'm not successful at something, I'm coming back, and I'm coming back to succeed. And it's probably a pretty good character trait to have if you want to be in the markets, because you're going to get knocked down. I don't know a single trader that's been trading as long as I have or longer that doesn't have, like, a wealth of war stories about just getting slaughtered and destroyed, or even just, like, sitting at the end of their bed pulling their hair out, wondering, like, can I even do this for a living, or can I continue? Most traders that have been around long enough will tell you we all go through that. What separates us from the people that don't make it are that we just keep coming back, and every time you come back, you're a better version of the trader that you were.
That's a great point. Yeah, is it fair to say then that perseverance and this interest and determination to just continuously improve and get better until you can make it is a key to being successful?
It's 100%. You really have to like doing hard shit. Like, I mean, I always liken it to the gym. Like we would go to the lifting heavy weights, or running long distances, or doing really really hard stuff. It's not fun, but you do it because the satisfaction you get out of doing something extremely hard.
I wanted to ask a little bit about your trading style. What was your trading style like early on when you first started trading, and has it evolved over the years? And if so, how? What's your current trading style, and how does that compare to the early days?
Yeah, so the early days, like the pot stock boom, OTC was I think I had 10K in an E-Trade account. My business partner had a $10,000 E-Trade account, and I think we had a joint $10,000 E-Trade account. So I was managing like 30K, but all in separate accounts. So we couldn't short. It was long only, and we were just literally buying really crappy OTC companies and praying that it would go to the moon. Probably not much different than some of the meme stock mania you had in 2020, 2021, except I entered that fray towards the end of the cycle, pretty much buying the top of everything. But so when I got destroyed from that and rebuilt and studied and came back, that was when I kind of, during that phase where I was relearning or studying and kind of trying to figure things out for myself, that was when I learned that you could short stocks. And so I realized that I was great at buying the tops. So why not learn how to short? So then I ended up, getting myself an account that was large enough to day trade without PDT. I think it was with Interactive Brokers at the time. And I was not playing OTCs at all. I completely stayed away from that market because I just had a sour taste in my mouth after that. And then, I would, and actually I do remember one thing that stuck out was being long something that they did a secondary raise while I was long, and I got crushed, and I was like, what is this? And I had a friend who knew a lot about the fundamental side of things, and he kind of explained it to me a little bit, and I was like, what? I was like, are you serious? And so I didn't even know that could happen to you. So that was a huge light bulb moment where I was like, dude, you think something, and then something will like make it, it'll humble you to the point where you're like, yeah, I gotta go. I didn't know shit about shit. Time to go learn. And that was kind of what turned me on to SEC filings. And I actually did pretty well for a while there. I had a nice long stretch of stacking wins and growing my account. But again, there was something lurking in the darkness that I didn't know about. And it's not until it rears its ugly head that you learn about it, and you learn the hard way, and that was risk management. You can short these crappy companies when they have these fluff PRs and they gap up. But if you don't know how to manage risk, it's just a matter of time. It's not if, it's when. And so that I had to go through that learning pain, or that growing pain. And then it was after that, it wasn't a blow up, but it was a big enough loss that it really hurt. And I took a step back, and it was at that point when I think I found my first mentor who took me in, and he was a real blessing because, he had a system, and at the core of that system was understanding how stocks move. And once you understand how stocks move and how things trend, you can then deduce where you're wrong on a trade, meaning you can manage your risk, because when you know where you're wrong, you know where you have to stop out, and then you can size appropriately. And that was really where I finally started to get traction. Once I had those concepts added to my tool bag, I began to really see some consistency. And I think that was right around the 2.5 year mark, something like that. And so yeah, I've been on And it's not like the last, even though it's been 7.5 years since then, it's still that roller coaster ride, right? Like I think I mentioned it at Traders for a Cause, it's like for the newer traders out there that are watching this and listening, when you hear or see veteran traders, I'm talking people that have been trading even longer than me, like 20, 25, 30 years, they'll tell you that you don't just wake up one day and you understand everything and you got it. It doesn't work that way. And a lot of newer traders think that if you just keep grinding, you keep working, one day you'll figure it all out and it'll be easy and you'll have like this magic key to the castle. And it sucks that I'm trying to burst that bubble of everybody's, but someone's got to do it. So I'll be the jerk.
Yeah, that's I think important for people to understand, which is even some of the more experienced traders that we heard this year at Traders for a Cause were saying, they'll have drawdowns. Things aren't always, unicorns. It's hard. It's difficult, and there's constant evolution.
Well, and then you had a lot of guys start in 2020 because of like it was just a perfect storm. Everybody's at home because they can't go to work. And then the government hands out a bunch of stimulus checks and Reddit's pumping all these names on the message boards. And people are just like, oh, this could be my ticket. And, like it's funny because, we started out talking about when my early trading, how the first thing that happened to me was just getting slaughtered. And people go, oh, that must have sucked. To be honest with you, it's probably a blessing in disguise because I would rather have that happen early on than the opposite, which would be starting in 2020, watching everything you buy just go to the moon and thinking in the back of your head that you're God's gift to the stock market. You've got this all figured out. Nothing could stop you. And then the music stops. And it's like, wait a second. You can't just buy every dip and just hold, and you can't break rules and things will come back and bail you out. Like you have to understand that like that market was an anomaly. And as much as a lot of us probably hope and pray that market one day comes back, the chances of it coming back soon are probably slim to none, right? Like at least not until we shake out all that new money that came in that's still kind of holding on by a thread.
Yeah, that's a great point, and also sort of makes me think a little bit about like cycles that happen in the market, where whether it was the .com era, or like you mentioned, COVID, things go up, they go up, and they go up, and people get so used to buying the dip and profiting that they aren't necessarily prepared for what might happen when the dip of the dip starts to dip, and then they got to really think about how much money they might have lost, where they could improve their strategy. And it kind of, in a certain way makes me think back to, for you and what you had shared, which is when you first started, you were looking for stocks to go up, and then you started again and you were looking for the stocks to go up. And then you had this offering that happened. And, maybe for some of those newer traders who started in 2020, they can, learn from your experience was, you looked to understand fundamentals and find out how you could get better and sort of turn, a bad situation into one of your strengths now.
Yeah. Well, I mean, everybody's heard the cliche of 90, maybe even 95% of traders fail or don't succeed. Honestly, I feel like probably if you took like 100,000 new traders that started in 2020, my guess is that like 70,000 of them are just in it for the wrong reasons to begin with. Like they're just chasing shiny objects and like they're not going to pick themselves up off the dirt. They're not, as soon as they realize it's not easy money, they realize it's not for them. And so like when you remove that 70% of them, right? Like that's a large percentage of the 95% that fail, right? I think if you're one of the, the 30% left that can actually pick yourself up off the dirt when you fall, and you're willing to put in the work, and you also understand that it's a process and a long journey. It's not a sprint. You are probably setting yourself up to be one of the few that can make it. But like again, it's a lot of it has to do with people coming into the markets for the wrong reasons right off the bat.
Yeah. Yep. That's a great point. You had mentioned that once you learned how to short sell, you found a mentor and things really started to get more consistent for you and took off. So I wanted to ask a couple questions on that front. So, what was the process like for you to really fine tune your short selling? How long did that take? And what was the process like for you to get a mentor? Was that something that took time, or what was that process like? To meet them and to gain enough confidence to really continue that relationship.
Yeah. So, well, let me be clear, is like I started shorting stocks before I had met that mentor, which was why I took that like really big loss at one point, because like I hadn't had the fundamentals of risk management ingrained in my trading. And so like prior to meeting him, I would just short things as they would rip. And you know, had I had I tried that in 2020, I probably would have blown up an account, right? Um, but this was, I think, in 2000, must have been 14 or something. Uh, and stocks wouldn't run crazy like they've been known to now. But every once in a while one does, and you get into early, and you don't want to take a loss to something is a piece of junk. You get stubborn, you add to a loser, and before you know it, you're stopping out because you literally have to, because you're just like, I can't lose any more money than this, or I can't handle that. So I always tell people, like, the best way to stop out is when your plan tells you to, because the other way to do it is because you have to. And like the difference between those two is night and day, right? Like, in fact, the mentor that we're discussing, he used to have a funny saying. He'd say, a margin call is the wrong way to set a stop loss. I mean, there's people out there that get them, right? And it only takes a moment of like 1 second of lapse of judgment, or just hesitating for a split second when you should have, or you asked the wrong question, like maybe it'll come back, or what's another 20 cents, and those things just snowball. And but once I learned from him, it became very clear that risk management can actually be systematized, right? Like, if you know where you're wrong, you want your entries close to that as possible, and you want to size your position based on where you're going to stop out, so that when you stop out, that it was a planned loss, and it's nothing more than that. Risk management really is just learning how to protect yourself when you're wrong, which is quite often. Like, I mean, unless you're, and that's another thing we'll probably talk about later in the interview, but like, I'm a big advocate of lower win rates, because there's so much less pressure on me. I'm not trying to figure out like, no, this isn't the 1 out of 10 that's not going to work, is it? And then you're fighting it. When I put on a trade, I'm like, if I have a 45% win rate, every trade I put on, I'm like, it's okay. It's going to be another one of the 6 or 5 losers out of 10 or whatever, right? So it's not a big deal. So you put the trade on thinking ahead of time, you're probably wrong. And then when they work, great. But when they don't, you sized appropriately, and your stop's in a logical, rational spot. So it's okay to be taken out of the trade, and that you're okay with the loss. And so that was that was the direction my trading headed once I had that kind of a tool to use. As far as everybody, well, not everybody, I'm sure a lot of newer traders are young and probably have never heard of them, because we're all getting old now. But All Day Holds was his name, and he used to be on Twitter. He's still on Twitter. I believe he might have made his account private, but he used to have a room back in the day that was, invite only, and he would teach you a system. And he's a great guy. I honestly owe a lot of my success to him, and he's actually been a good friend of mine over the last years. Like, he taught me a lot from the get-go. And I will say this, though, to everybody that is learning from a mentor, right? Your job is to take what that guy teaches you, or girl, what they teach you, and incorporate it into your own style and make it your own, right? Because I've had multiple mentors throughout my career, and like, any of one of my mentors looked at my trading style, they would be like, well, I see pieces of what I showed you in there, but like, what is all this? And like, it's Ricky, it's mine. Like, so that's an important thing, right? Is to make sure that like you're not going to just find somebody that can give you the holy grail, but they can teach you something that you can later use in your own trading for your advantage, right? But take the good stuff that works for you. Some stuff might not resonate, right? Get rid of it and just keep the stuff that works, and just keep doing that over the years, and you eventually kind of come to your own style of trading, right? Your own system, your own process.
Yeah, I think that's really important, is to be able to take what you can from a mentor, and adapt it to your own and what fits you and your personality. That's great. And is it fair to say that risk management for you, and not even necessarily a high win rate, but risk management is a key to your trading style?
100%. Yeah. Well, and I honestly, I can't imagine a successful trader saying that it isn't. If you don't think that risk management is like one of the top priorities of every trader, you're missing something. It has to be. I just honestly don't. It's no way around it.
Yeah, absolutely. And what percentage of your trades would you say are short, and how many of them tend to be on the long side, and how many are swing trades versus intraday trades?
So with the large caps, it's about 50-50. Because of the system I trade, it's pretty agnostic to like bias. It's based on price inefficiencies off the open, like the price discovery phase. And I don't have to worry about a lot of these the large caps. I don't have to worry like, oh, is it a toxic POS that's gonna have an ATM that I'm getting dumped on, right? So I don't have to worry about rushing to BAMSEC and like looking up the filings on Meta or Google or any of those companies. But when it comes to the small caps, I'm pretty much 99% short. I think there is the rare time when I'll take a momentum trade that I see is going to squeeze the shorts out, and I'll get on that long side. But even then, I still don't like doing it because I just don't feel comfortable, because I'm always on edge. Like I know this company's a piece of junk. They're going to pull the rug on me. So it does make me hesitate a lot. But yeah, when it comes to the small caps, probably 99% short. Large caps, 50-50. Swings probably make up about, especially right now, swings are like 1%. When we get back into a bull market, then we can talk, and it'll probably be closer to 10 to 15%. And like even though I say like there might be like 1 or 2% of my trades now are swings, the ones that I'm swinging nowadays, they're not longs. I'll swing things short just because that's the path of least resistance.
And do you find that you tend to start with an intraday trade and keep it intraday? Or are there certain instances where you'll start intraday and you'll let it expand into a swing trade? Or when you are thinking of an entry, are you always thinking, when it ends up being a swing trade, does it always start as a swing trade?
So I actually feel like I've seen traders do this a lot, and that is you start it as a day trade, and you end up fighting it, and it becomes a swing. And I'm really against that, right? So we have to understand that like from the get-go, that is a no-go in my books. But I will start a swing as a day trade, but I identify it as a swing prior to the entry. Like, in fact, I've given quite a few of them out in the Sunday preps when I do those, where I'll say, look, I actually like this for a swing, but the way I'll enter is via a day trade. And I'll just, if I'm scaling out at my targets and it's behaving well, and I'm going to close the day with some cushion, and it's closing strong if I'm long, or if it's closing weak if I'm short, I will leave a runner, and that piece becomes the swing. And then as that swing develops, you can always kind of add to that position as it's working, or you can clip it if it just doesn't work. But that's typically the way I do like to enter my swing trades. Yeah.
In all your years of trading, what would you say so far has been some of the highlights for you? Whether it's, not even necessarily monetarily, but what have been some of the things that you consider to be like milestones for you and your accomplishments?
To me, really, it's just the ability to just be present for my family, like my kids at certain points in their life. Whether it's helping out, like literally this morning, I left my desk. Like I'm on the West Coast, right? So the bell rings at 6:30, and my kids go to school right at like 7:15, and my daughter is in kindergarten, and I went with her at 7:15. I left the house and walked her to school and read a book to her class. Like the teacher invited some of the parents to come read, and I'm not a smart guy. I know I'm a trader, but I can read kids' books. So I went over there and it was a blast, man, hanging out with a bunch of kindergartners and realizing that there was only one other parent there. And like she had to read first because she had to get out of there and go to work. And I was like, yeah, go ahead. I'm fine. Like I asked my boss, it's okay. And that is to me like probably the biggest reward trading's provided, right? Um, and the ability to travel and work still, like like a lot of people have probably experienced this where you're poolside at the hotel and your wife is giving you the evil eye because you're still glancing at your phone. um you know meeting a lot of great people. Honestly, one of the things that was a huge mile marker for me personally was the fact that I'm like really good friends with people that I used to like legitimately idolize. And that all became possible because, I learned how to read SEC filings and I realized that like nobody was talking about them online. Like it was like this, keep it hush hush, don't tell people about this. And I was like, what? I was like, that's silly. Like we can teach people the basics, right? So I started making all those YouTube videos and like it always comes full circle. Like you like put out energy and it comes back. And so like some of the guys that I knew were already into that niche, were people I used to really look up to, and like they're big swingers, right? They make a lot of money. And I used to just think like, oh, I'll never be able to have a conversation with that person, or I'll never meet that person. And it's like, dude, most of those people that I used to say that about, like I text them daily, or I'm in a Discord room with them, or I see them all the time. And that blows my mind all the time. I'm like, and I know that's really cheesy, but it's true.
I think that's a really insightful and actually fascinating answer. I think a lot of traders probably get into trading thinking about the flexibility they'd have in their life, only to start trading and sort of get preoccupied for hours and hours and hours at the desk and sort of letting personal life, family kind of go by the wayside. And as traders, we are, as you mentioned and you bring up, we are fortunate enough that we do get to spend, if we choose and we make it a priority to spend more time with our family. And like in your case, getting to go read, for your kids and go to their school. I can imagine if you had brought in some SEC filings, you'd make everybody's head spin, and you would easily be the smartest guy in the entire school. People don't necessarily know how to read those filings.
Yeah, actually, one of my good friends out here in the area is inefficient
Market.
market, yeah, on Twitter. And so like I won't say his name just in case he wants to be private or whatever, but like he's a good friend. And for my son's first or second birthday, he got him a book on digging, like these big old excavators. Like, man, and ever since then my son has been just absolutely enamored by big machinery like the excavators and the dump trucks and stuff. So we always joke about that.
Yeah. Yeah, the other kind of digging.
Yes, yeah,
Yes.
the real dig.
Yeah, that's amazing. And sort of speaking about fundamental analysis, which, I think it's fair to say you've become known for to a certain degree amongst trader circles, and definitely have excellent content online. I highly recommend everybody go find that immediately and learn all that they can, because you do a great job. Where did your knowledge of fundamental analysis come from? Were you just reading a lot of books, or or how did you become so knowledgeable about the fundamental side?
Well, remember the story about the offering. When that happened, I was in a small room with a friend of mine, Devin, he's really, really good at that stuff. Like he's super, super smart with SEC filings. And he kind of was snickering at me, kind of like, ha, you didn't know about this. And so when I realized he knew, I started kind of like, bugging him questions here and there. And, he was kind enough to be a dick and never give me the answer to anything. He would literally be like, just like I was telling you, like I tell people, right? If you ask me a question, I'll probably answer with a question. He did that to me. So he was kind of like the original. And but he was good at asking questions that gave just enough of a hint, right? Where I would know kind of like where to go look. And I mean, as most people can have read an SEC filing probably understand that it's written a certain way to make it, as confusing as possible. It's all lawyer jargon and it's not fun. It's very dry and boring. But the thing about it is it's very, very repetitive because they use, like, most of the time, these boutique banks that run these offerings for the companies and do the filings use these boilerplate templates to save time on all the paperwork and stuff. So you really do end up reading the same thing over and over and over. And when you do that, repetition is just, it just sticks. And so eventually, and this is what I've always told people, is like, just keep going. I know it sucks, but just keep reading. Every time there's a crappy company running, read the filings, read their 10Ks, read their 10Qs, read the 8Ks that matter, and then go read their prospectuses. And when you do it for a long enough time, just like anything else, man, like it just becomes easy. Like I literally can look at filings nowadays, and obviously they always throw in small little tricks here and there, right? But usually you can spot them because it's the one thing that you're like, oh, that's a little different in this filing than it is in all the other ones. Why, right? When something's slightly different, you always have to kind of be like, there's a little flag there. And obviously you go in kind of, and this, I don't know if this is a good or a bad thing, but I think typically when you read the filings, you kind of go in with a bias because why else are you reading the filings, right? You probably think it's a piece of junk and it's running. So you want to identify where the potholes are. And so, you start doing it for enough and it just becomes simple. And people hate to hear that because they're like, damn it, I just want to control F and search a term. But I'm telling you, like, I used to get people that would find like an S3, which is just the registration statement, and they would type control, or they'd hit control F and type at the market, and they would be like, look, they have an ATM, they have an ATM. And I'm like, dude, they literally almost every registration filing leaves that as an open door, right? In case they want to run an ATM off that shelf. And, but so I've seen people do that where they think there's an ATM, they rush in and short the stock, and the price action is in complete disagreement with their thesis, and they get smoked, right? So,
Yeah, that's an interesting point, is that it gets easier over time. I guess like everything, but maybe people are just not so interested in doing the reading. But I think it is actually really helpful to hear from someone who does a fair amount of fundamental analysis that it does get easier, and just to keep digging, keep going. And a lot of people are just 100% technical. So one of the questions I have for you is, do you think that it's, let's not say like a mistake, but at least limiting? Is it fair to say limiting to just be 100% technical when you're looking to short especially some of these small caps?
I'm a very firm believer that, like, no matter what you find in the filings, you still have to let the technicals be your guiding light. And, because it doesn't matter if, they're going to dilute, or if they're going to do a raise down the road, or if they have an ATM. None of it matters if price action is in disagreement with your thesis. And, so I've actually, one of the videos I did, I think, was just basically pointing out how filings and reading the filings could get you blown up, right? You could ruin your whole career by thinking you found something in a filing and then ignoring the technicals. And so, I don't think so, but I think you would be missing out on clues that would allow you to have more conviction. So like there's times when, the fundamentals and the technicals line up. And if you don't understand the fundamentals, like, and I honestly, I don't like calling them fundamentals, because like when I think of fundamentals, I think of, a balance sheet or like their cash flow statement. But like what we're really talking about is like share structure and the SEC filings, like the red flags and that. But like when those line up and like the technicals in that, you can lay into a trade knowing that like, this is that A++ setup. Whereas if you're just technicals and you don't have that other perspective, you probably are going to be able to trade it just like you would trade any other setup that is that same setup.
Yeah, that's a great point. And I think that is an important distinction that you made, is that these are more about the stock structure and the possibility of, say, like dilution, instead of just the fundamentals, EPS and things like that.
Yeah. Well, and like there's always there's rules that all these companies play by, where they have to maintain certain things to be compliant. And as long as you understand the rules to the game, sometimes you can spot when they're off sides and they have to do something in order to get back on sides. And there's people that play the fundamental side from the long side, and I have a total respect for that as well. Me personally, it's easier. It's easier for me to just be patient for those things to gap up, maybe have a second or third day where they're running, and then go, okay, it's getting some meat on the bone here, it's getting pretty juicy, let's go take a peruse at their filings and see what we can find. And like I've been telling people, the ability to trade large caps gives me the patience to wait for that 4 or 5, maybe 6 setups per year that are like the ultimate A++ setups in the small cap world. Whereas, people that only trade the small caps, they come in the market, sometimes there's nothing to trade. Something's gapping up 20% and that's it. And they're just like, oh, well, I'll try to short that. And they get ripped on. And it's like, because they feel like that's all they can trade is these small caps. I really think traders that are tunnel vision with that should work on expanding their playbook to the large caps and trying to just really understand the fundamental underlying way stocks move. That you'll always hear me say that. Like I said, my mentors taught me that, and I talk about it with traders I work with all the time. It's like, I can't imagine trading stocks and not truly understanding those key fundamentals about the way different time frames have to do a certain dance. And I feel like not understanding that is literally trading with a blindfold on. I mean, you just look at a chart and say, I guess it's up too much. Oh, it's moving into this moving average, or I don't know. But like, if you don't understand what the author's writing, how are you going to read the book?
Right. Yeah, that's a great point. And for those traders who want to have a better understanding of how stocks move, what is some advice that you would give to them, in terms of different time frames to look at? Are you is there anything that you would recommend that they do in particular, looking at time frames, or is it like support resistance levels, or?
Yeah, I mean, a lot of it is definitely making sure you understand how to use timeframes in conjunction. There's a lot of traders I feel that get really hyper focused on these 1-minute charts. And I understand it. There's a time and a place, right? One thing I'll say is, when stocks are overextended, or either way, right, to the downside or the upside, the reversal of that extension, by definition, has to happen on the lower time frames first, and then it will cascade through the time frames. So like a lot of times people are worried about missing a move, and that's why they're just sitting there looking at a 1-minute chart, not realizing that if they zoom out even to a 5-minute chart, you can realize there's still plenty of meat on the bone and what needs to happen for that to actually reverse and come in. And, you know, like, if you guys want, you guys can always come over to truetrader.net. I talk a lot about it over there, but, you know, it's something I teach the guys there. And so I don't want to like give it away to everybody, but, you know, there's, you know, clues are littered throughout Twitter between me and a few other guys that talk about it a lot. If you do the work, you can figure it out. I will say this. So I have a first, like a broad view I take of every single trade, right? And the first question I ask myself every time I'm taking a trade is, am I joining trend or is this a mean reversion trade, right? Because the two have to be treated separately. If you're joining trend, then, you know, you have to understand what time frame it's trending on, where you're going to be wrong at. You know, if you're trying to get a mean reversion, you're looking for something that's extended. You're trying to take the meat of the move and be done with it, right? So start there. Make sure you guys answer that question before you ever put a trade on. I see a lot of people, you know, putting on mean reversion trades and then acting as though it was a trend trade, right? And holding for targets that are pretty much irrational or like very subjective, as opposed to having objective targets for different types of trades.
I also wanted to talk to you, Ricky, about your mentoring and, you know, helping traders to improve as traders. And so I wanted to start with your the dig videos on YouTube. You know, they're amazing, and I know that they've helped, you know, thousands of traders out there. And so, first of all, thank you for making those. You know, having watched them myself, they're extremely helpful for me. They educate me, and I'm sure a ton of other people out there. What was your inspiration to start that series and to make those videos?
Well, first of all, I want everyone to understand that I think they're getting kind of old, right? They've been out for a few years. And like when I rewatch them, they're like cringe. Like I cringed because I'm like, oh man, they're so corny and whatever, right? But I know that a lot of newer traders that don't know anything about filings get a lot of value from them, because it is kind of hard to find stuff on that topic. And that was the goal, was just, you know, it's not going to give you the answers to everything. It's going to give you like a very base foundation to work from, and then you build upon it. But I think one of the motivating factors, I think, was just seeing people on Twitter be so clueless and say things that were not true or factually wrong. And I got tired of correcting people, and I was just like, dude, I'm just gonna, like, I think the first one I made was on warrants, and I was just like, dude, there's this huge misunderstanding of what warrants are and how they work, and I was like, they're not that difficult. And so that was the first one I made, and I think it got such good feedback that it just kind of like motivated me to like make more. I mean, that's really what happened. It was kind of one of those off the cuff things that just happened to work out. And like I said, like I look back on them and it's almost embarrassing, but you know, whatever, you only live once, right?
Yeah, I mean that's actually like YOLO, but for the helpful side.
Yeah.
Yeah, I mean it has a lot of benefit for a lot of people out there, and I'm sure plenty who watch this will agree that there is a lot of inaccuracies on the internet, Twitter and elsewhere. So having someone who has worked on understanding things about share structure and teaching all the, you know, even if it's just a little bit, could do a whole world of benefit for a lot of traders out there. And maybe someone will comment on this video that they've actually just, you know, started with the breadcrumbs that you gave and just completely excelled at it, and that's, you know, that's all they do now. Maybe they are a lawyer. Who knows?
Actually, I know a lot of traders that they did take it, and they probably, you know, if I ever don't understand something in a filing, I've got a lot of traders out there I can reach out to now and just be like, hey buddy, what do you make of this?
That's excellent. You know, I think that proves like the recipe was successful, so to speak, you know. So
Yeah.
In
Yeah.
in terms of your Sunday prep videos, which I know a lot of people also watch, one of the things that I think is really interesting is that you always mention that you're sharing your weekend prep. That you'll take this process that you show in your videos, and you'll do that every single day. So I got a couple questions that I was wondering about. First, is that process the same for you throughout, your all days, of the week? And how important is it for traders out there to have a very similar process, or at least some process, where they're looking at charts, time frames, looking at maybe industries and individual stocks, and lining those up with technical analysis? How important is it for everyone to have their own process like you do?
I think it's extremely important. Preparation is everything. You got to come prepared. But I'm not gonna lie, like Sunday prep is definitely like a version of the prep I do on steroids, right? Like the Monday prep, Tuesday prep, Wednesday prep is like a stripped down version, but only for the reason, like I was actively trading that day. And so I know what was moving and what sectors were big, and, where the SPY and the Q levels were. And so there's, it's a lot fresher as opposed to just, I'll take most of Saturday off and hang out with the family and do things, and, get the prep ready on Saturday, and then we go live on Sunday. And it's like, it's as much as I do it for everybody else, like I definitely do it for myself, because like I need the refresher on Sunday heading into Monday morning to just, and it's always good, to have like a broad view going in, and then you can see what's working, what's not, and then adjust on the fly come Monday, Tuesday, Wednesday, Thursday. And then again, you just do a full reanalysis of everything on the weekend and just start the process over. But process is everything, because, it just makes things so repeatable. It makes it so that, I don't have to use a bunch of energy thinking about how I'm going to attack this project. It's just another habit that I've built. It's a lot of people would benefit from making routines out of a lot of their morning stuff, right? Like, I'm borderline OCD when it comes to it. Like, everything from the moment my alarm goes off to the moment I sit down at my desk is done like a certain way, and it's always repeated. And it's to the point where, like, if something's a little off, it irritates me. It's not like I'm not going to full blown go nuts or anything, but it's just one of those, I just have to have things be very routine in the morning.
I think this is a great point, especially about routines and how that could lead to consistency. If you have a routine, then it's probably more likely that you're going to continue to be consistent and make sure that you're doing the same things day in and day out, which I would imagine a lot of people would agree tends to be very helpful when it comes to trading the market.
Well, I mean, what does it take to be consistent in a routine? It's discipline. Discipline is, in my opinion, is the number one character trait you got to have to be a trader. You have to be disciplined.
That's a great point. And I think for a lot of traders out there, your videos, your prep helps them to do that and teaches them what they can be doing all days of the week. So,
yeah. Well, and I've done, I don't know if it was on, I don't know if it's, I think it might be on the public YouTube, on True Traders YouTube, but we did an episode where I just walk people through how I do a prep, right? And if it's not on the public YouTube, you guys should probably understand it anyway, just from watching the Sunday preps, but it's the same thing, right? You start with the broader market, then you do a sector analysis, and then from there, you generate your ideas. Everything is very, very repetitive, and it's done that way on purpose. So I don't have to sit there and like burn out and be exhausted from doing all the work. It's just automatic.
and do you find that going through, the Sunday prep, or even just teaching, and mentoring people more broadly speaking, do you find that it's also helpful for you in reinforcing some of the habits that you want to maintain consistent and concepts and things like that?
I would say it's more helpful for me than it is the people I'm teaching. Honest to God, like I say things all the time, and I tell people, I go, I'm trust me, when you hear me say that, it's a reminder to myself as well.
Do you find that, in working with other traders, that it's helpful for them and you to maintain as much of an open mind as possible, especially, since you might be trying to tell someone that they need to maybe change or break certain bad habits?
Yeah, definitely. And I mean that stems from just, learning from different mentors and realizing, like, you know, you might meet one trader and be like, oh man, this guy has an amazing system. I love the way he trades. And you'll probably think like, I don't ever want to trade any other way than that. That's how I want to trade. And then you meet another mentor and you realize he trades completely different. And you go, oh wow, I like the way this guy trades. And it's like, you would never feel that way if you come to the table with a closed mind, right? You got to keep that growth mindset that, it's a constant journey. Like, I still learn stuff all the time, and I know, and I love it. And if you don't like learning new things, this isn't for you at all, because that's all it is. It's a never ending education.
And for the traders who, would say, it's been maybe a year or 2 years, things haven't clicked yet, what advice would you give them? How much would you say, well, this is just sort of par for the course. All new traders go through sort of, difficulties when they're starting, versus, okay, maybe it's time to think about how they're trading, or what preconceived notions they might have about the market. How do you sort of resolve that, and what's your advice to people who are still looking to become, consistently profitable trader?
First, go to Project Impact and donate money and watch Brian Lee's last Traders for a Cause talk. um yeah, if you're like, I mean, that's a good one to start with, because he touches on that. I get that DM a lot. The last guy I talked to, without going into the DMs to read it, if I just remember off the top of my head, the advice was, you know, you have to create rules and a system, and you have to trade small enough that you're not going to blow up the account, because you're going to be wrong a lot at first. And you need to, even if your rules and your system suck, and they're going to, your first go at it, they're going to suck. Make some rules that you think are good, that make sense, they're logical. And even if they suck and aren't working, stick with them, and with 100% discipline, trade that system for a long enough amount of time that then you have a sample size where you can go back and analyze it and make adjustments. And you make adjustments, change some rules, make some new rules, get rid of rules that didn't help, and then trade it again for a little while and analyze it. And you should incrementally get better. And what most people don't do is, one, they don't systematize things. And two, because it's not systematized, they're trading off of intuition, and they're literally just hitting buttons when their emotions are telling them to. They are consistently doing the same thing. And like, they constantly are putting themselves in trades where they go, I did it again. I chased this trade, or I shorted in the hole and then it blew up in my face. It's like, yeah, okay, so how many times do you have to do that before you make a rule that says do not do that, and then stick to it, right? And if you're trading off intuition, you're at your emotions whim. You just, every time you have one, you're going to be coaxed into doing something you're going to regret. So you have to systematize it. You have to, and even if, even for the discretionary traders out there who will hear this and go, oh, that's bullshit, I don't have a system. You do, you just don't know it, right? Like, you've been trading long enough that your intuition has rules ingrained in it that prevent you from doing things and keep you doing other things consistently. But for the newer guys, you got to, because all you are is a ball of emotions, and you're new to the market, and all you've known is pain and loss. Well, obviously what you're doing is not working. So ask yourself what it is that you keep doing that's causing you problems, make some rules about it, then make some other rules that'll structure when you should be participating in the market and when you should be sitting and just doing nothing. And then trade it. And like I said, trade small so that you give yourself a really long runway, because you're going to need it. It's not going to happen overnight. So the longer the runway you give yourself, the better. I know some people will tell you to paper trade. I think paper trading is great to see if a system can work, but then you need to do it with real money for a while too, to see how the emotions affect it. But that's the advice.
And I think that's great advice. So thank you for that. And for newer traders or even developing traders, what's your recommendation when it comes down to tracking trades? Are you an advocate for like journaling, screenshots of charts? Is there any like software that you recommend for tracking trades or anything like that?
So I track a few different systems. They're done manually, but I have a bunch of macros and stuff in my Excel sheet that allow a lot of shortcuts for myself. And it's funny because like I've got just an ungodly amount of data on these systems, but I continue to track them for the sole reason that like if something changes and these start to not work, or maybe they start to work even better, whatever it is, I got to be the first one to know. Like I have to know, and the only way to know for sure is the numbers. It's for, at least for me. I know some would be like, I've got a really good feel on the market. Well, I have really good data, so I don't need to have a feel. I could be numb. But it's not just the setups. I also track. I mean, everybody should track their performance metrics. And I actually talked about this last Sunday on the Sunday prep, and that is, you cannot just collect the data on your performance and look at it and make a judgment. You can't go, I'm red, I must be trading bad. I'm green, I must be trading good. Or my win rate's 70%. I must be right all the time, right? A lot of times those metrics are really misleading at face value, because they mask the underlying trades. Every trade individually is combined to make those metrics. But what if like on half of those trades, you broke your rules and you made money? And so at the end of the week, you look at your metrics and you're like, I traded great. Did you? Did you really? Because until you're looking at the authentic, honest metrics, they don't tell you what you need to know. A lot of traders, I talk with a lot of guys that have 70, 75, 80% win rates, and they're not profitable. How is that? How is it that you're right that often and you can't make money? I'm right 44% of the time and I make money. So how are you right that often and you can't make money? Well, the story is as old as time. It's a ton of little wins and then one big loss, and it takes them all, right? So another reason why I really enjoy having a lower win rate and just looking for very asymmetric trades where I don't have to sweat it and just keep on swinging at the pitches. When you hit the ball, it's gone. It's a math equation and it takes care of itself. But the problem is, if you look at your stats and it says, oh, you have a 70% win rate, what you will do is you will tell yourself, I can take trades that are 1-to-1. Because if you risk a buck to make a buck and you're right 70% of the time, you're going to make money. But what if you're lying to yourself about the 70% win rate and you really have a 40% win rate? Well, guess what? You're going to bleed money over time and you won't know why. So, you really, really got to be honest with yourself when you're looking at those performance metrics. Yes, I definitely save charts of all my trades. And I track a lot of data on strategies that I'm not even trading because I'm always trying to create new systems, new setups. I use a software called Spike Heat, or it's a company, Spike Heat. to pull data on things that I see in the markets. It's been a huge time saver in my life because, used to be you would see something developing in the market and you'd be like, I think I'm noticing a new setup emerging that's starting to work, something's starting to pay. And in order to collect data on that setup, you would have to manually find that trade whenever it presented itself in the market and then collect all the data points on it. This allows you to like retroactively just cast this like really big net and pull all the data from those setups historically, and find out, is there actually an edge there? I also use it just to create scans, right? Like we talked about a setup we coined when short screen. And it's basically, one of my mentors had pointed it out. He goes, look at this stock. It's been up, 2 or 3 days in a row, and it's closing on highs on this day. What do you think people that are swinging this short are feeling right now, right? They've never been let out. They're really just like frying in the pan. And I was like, it's something we've known about. We've seen this time and time again, but it wasn't until he like verbalized it that way that I was like, I can create a scan on that. We don't have to look for those. I'll go find them all. And so I use Spikey to basically make a scan that finds all of those. Every morning, I'll put the list in our room, and I just call it when short screen, right? And so there's a candidate list, and then there's the official member list, which means the night before it closed on highs, and so it's a candidate. But to make the official members list, it then has to also gap up and squeeze off the open. And so basically there's things that it still has to do to really be an A+ setup. But once you identify it, then you can track it, you can and learn, is there an edge there, right? We just did the same thing for another type of setup. And those are things that I'm constantly doing, constantly trying to stay ahead of the curve, right? Because like you said, man, it's a never ending education here.
Yeah, absolutely. Thank you so much. I think that was a masterful answer and gives traders a lot to think about in terms of what they're currently doing, how they could assess what they're currently doing, how they could be better, and really set some, really high bars for themselves in terms of being able to document, pull data, get better, find new strategies. And so thank you very much. I think that was really, really helpful.
I'm happy.
And so if it's okay with you, Ricky, I would love to be able to do a rapid fire round of questions with you. Just, quick questions and quick answers. Is that something you'd be okay with?
Yeah.
Cool. So the first question that I have is, what do you consider to be your greatest strength as a trader?
Probably discipline. That's one of those things where I've just, certain things in my trading are non-negotiables. Sticking to my rules and making sure that I have bulletproof discipline, which I would say is the same thing as risk management, right? Managing my risk is all about discipline. So that would be what I would say is my core competency.
And what's the best advice that any trader has given to you?
To protect your mental state more than I think most people would, because and this came from my mentor, and he's worked with traders for a long time, and he's seen traders come and go, and he's told me these stories about traders that allowed a loss to be so devastating that they were never able to mentally recover from it. And I thought that really was crazy advice, because I was like, damn, dude, like everybody worries about their money. They worry about losing their money, but like you can always make more money and start trading again. If you mess up your mind state to where you are so risk adverse or you can't pull the trigger, you'll never be able to trade again.
Yeah, I think that's really, really powerful, actually.
Yeah. And that's why I'm so adamant about risk management. Like you have to protect yourself, and it's not just your money, it is your mental state.
Yeah. And if you could go back in time to when you first started trading and give yourself some advice, what would that advice be? And do you think you would listen to it?
It would have just been to learn risk management first, not after losing a bunch of money. But I don't know. I'm not sure I would have listened to it because there's a lot of lessons that become ingrained through the pain. Uh, and I think, learning lessons the hard way, sometimes it sucks in the moment, but in hindsight, it's good that it happened.
Is there any area of your trading that you are looking to improve?
Um, not necessarily an area, but I'll tell you this much. Um, every single year when we get home from Traders for a Cause, I treat it almost as like New Year's. Like that's when I do my resolutions. And so like this year was no different. And for the last few years, being a dad to some young babies, and I mean I have a kid that's in junior high now too, but like, I wanted to focus on my family. And so a lot of my trading was not, even though I was making money and doing fine, I wasn't pushing myself. And there is a competitive side to me. I think there probably has to be a trader, but um the competitive side of me, in ever since the last Traders for a Cause, is like, dude, you need to push yourself because you're only getting this life once, right? You live once. You don't want to retire from trading and have all these what ifs, like what could I have become, what could I have been. And so like I think I had a nice few years of not really pushing myself to see like, can I be that top level performer. And it wasn't necessarily like, it wasn't a bad thing. I enjoyed that time with my family. It was just that place I was in at that time. But I think that I'm turning a corner there after the last Traders for a Cause, where I'm like, we're gonna really crank this and see what we can do. So that was kind of what I'm working on currently.
That's awesome. That's excellent. And are there particular times of the trading day when you are most active, or certain times where you absolutely won't trade?
Yeah, I'm trade primarily the opening 30 minutes. I will stick around. So I live stream in our room. There's always someone live streaming the opening hour. I'm right now. I live stream Monday, Tuesday, Thursdays. Um, and so on days when I'm on live stream, uh, I will stick around after the opening 30 minutes just to like discuss trades or talk with traders and answer questions and stuff. But I'm typically not trading. If there is a trade that's something I've been stalking, that's going to be more of a trend join or an A+ setup that deserves my attention, I will stick around a little longer. But every day, every normal day for me is 30 minutes of trading.
Are there any technical indicators that you tend to favor on your charts when you are trading?
I am a huge advocate of the 20 SMA. I use it on every time frame, and I trade off of higher time frame pivots. So like pivot points can be based off daily pivots, weekly, monthly, quarterly. So I have the higher ones. I don't use daily pivots, but I trade off pivots.
And is there any advice that you would give to traders who are looking to seek out a mentor?
Yeah, just add value. Like I know a lot of people feel like they're newer to the community, and like maybe they feel like there's nothing that they have to offer, but that's not true. You're just not thinking about it creatively enough. Like the people that I always help out are the people I see trying to help themselves. So don't be lazy. Um, show people that you're reaching out to, that you put in the work, and try to add value. It's really hard not to want to help somebody that you see adding value. And it's literally, I think, how, like I said, like when I created the how to dig videos, that opened up all these doors for me because I was adding value. And I didn't even, it wasn't done for that purpose. But in hindsight, I was like, holy cow, that was like a game changer for me in terms of like who I now am able to reach out and talk to.
Yeah, that's excellent. And last question for people out there listening who want to learn more about you and your trading style, how can they do that?
Like you said, I'm a mentor over at TrueTrader.net. I do the Sunday preps for free every Sunday on True Trader's YouTube channel. I think you can get a lot of good value just from that, right? And that's free. I'm on Twitter, but mostly just to be snarky. Like, yeah, so at Ricky Analog on Twitter. I'm on Instagram too, but I don't go on there very often. Honestly, like the older I get, the more social media turns me off. But yeah, like like I said, if I see you helping yourself and putting in the work and adding value, don't be scared to reach out and say hi.
Awesome. Well, Ricky, those are all the questions I have. I just want to say thank you so much for taking the time to speak with me today. I think this is going to be extremely helpful for a lot of people out there listening.
Awesome, Anthony. I honestly appreciate the opportunity.
If you liked this video, don't forget to hit the like, subscribe, and notification bell. Thanks for watching.